All right, I just want to talk about my Fibonacci strategy and expand a little bit here, and something for me to meditate on. All these light colored dash lines on the right side are Fibonacci 50% retracements. And the reason why there's so many, here's a 50% retracement. Here's one right here with the dash line. Here's one right here. Here's one right here. Here's one right here, is because we're using multiple pivots to draw the Fibonacci retracement lines. On higher time charts, you'll see different pivot levels. Here's a pivot level here. Here's a pivot level here, pivot level here. And we're using this pivot here. And the top high part of, which is over here, we just draw multiple Fibonacci retracements. So you get different places where we expect some activity. Now, on a lower time chart, you can see that activity, all right? Sometimes it doesn't work, and you keep your stop loss tight. Let's say I wanted to buy right here on this one. It did bounce up pretty good. Was that a 1-to-1? Was that a 2-to-1? I didn't see it play out, but let's take this example here. This Fibonacci level right here bounced up very, very nicely. And we have to, the important thing about, here's a Fibonacci 50% retracement level right here. And I was just about to take this one right here, using this green candle here as my stop loss. The thing about this strategy is the risk management. When you're blindly buying a candle that has not finished closing yet, and it's coming into the touch, where's your stop loss? So that has to be planned way ahead of time. You have to have a certain percentage or a certain amount of ticks or a certain amount of dollar value that you've already decided ahead of time. It has to be well planned and concretely laid out. All right. In this case, if you wait for a touch and you wait for another candle to develop, like this one right here, this red candle touched, the next one turned green. We have a very small area here that we could use as a stop loss management, and it went up 3 to 4 to 1 risk. This area was very well laid out for a very tight stop loss. Even if we used this first hammer here, the next candle jumps up and starts going green. What I like to do is, well, you can either use the bottom of that hammer candle or the bottom of the currently developing candle, and it's an even smaller stop loss. That's what I was going to do right here. And then I realized I really don't have this plan laid out in my playbook. Let me go at it. Let me think about it. Let me make a video about it. Let me decide whether it's something I want to actually add to my repertoire of trading setups. And I do. I like this a lot. It looks like if it's done right, and that means risk management, if it's done right, it could really be one of the highest risk reward trades in my playbook. Keeping the stop loss under control. So what I wanted to do here, this red hammer candle was already developed. This green candle was taking off. It was right down here in the body of the red candle, and the stop loss was down here. I drew my stop loss area, and I drew my entry area, and it did go up to 1 to 2 to 1 on this risk, the risk being the bottom of the developing green candle. Jumping in on it, putting my stop at the bottom of that candle, and then letting it go up. Now, if I had used the bottom of this candle, the bottom of the hammer, then let's take a look at where the risk reward would be at that point, because it's different now. If I entered in up here, I would have only hit 1 to 1. My risk is the bottom of the hammer. I entered in on the green candle as it passes up through the top of that red candle, and it goes up and does get a 1 to 1. And now I'd be on break even right now. If I was going for a 2 to 1, I'd take my stop loss from down here and I'd bring it up to break even. There'd be no loss on this trade because it did reach 1 to 1. Depending on where my stop loss is, like I said, here or here, then the risk reward will change a little bit, but the strategy doesn't. As soon as you hit 1 to 1, break even, and you manage your risk is the most important thing with this Fibonacci technique. We're counting on 2 things: a Fibonacci level to be reached and a candle formation. So in this case right here, you've got a couple of Fibonacci's being developed here. If you waited for the candle formation on the green candle here to take place, and you're looking for that bottom of that candle to give you a risk reward, then depending on where you enter, right, you could have gotten something out of it. So let's say that we enter as price comes back down, or enter on we got a double test from two different levels here, or even if you caught it here, this would be a really good area. And I like to catch it. I like to keep my risk managed better. I don't really want a big risk. So if I did my risk reward here at the bottom of this consolidation candle and get in as it's taking off, my risk is at the bottom of this consolidation candle, and I definitely hit 1-to-1, probably break even at the minimum on that trade. All right. Now, if I was going to use, let's say I wait for a price to come back, and then I use this wick as my stop loss. Let's say I'm able to get in at a better price. I see the hammer develop, and I see price coming back down, and I want to get in as close as possible to this 50% retracement level. You know, I could get in anywhere on the red candle, and my stop loss is here. I might be waiting and waiting and waiting for it to come down. Let's say I wait for it to come down and close above this other 50%, and I'm like, okay, it's got a double 50% range. It closed above both of them. Let's go here with the entry. There's our entry at 100%. We hit 1, we hit 2. Here's the second, 2-to-1 before it comes down here. So it is an interesting technique that I'd like to develop and watch more. Let's add it to the playbook. That's what I'm going to do right now. That's what this video is for. It's part of my trading repertoire now. Depending on the market itself, if there is a correction going on, or if it's a bigger correction, or if it's a strong bull market, it depends on the macro events. But notice how at each level of the Fibonacci, we get action. We get action here. We get action here. We get action here. Very reliable. Not big moves. Not big moves. In fact, it's downtrending right now. And the only way to catch, Fibonacci bounce is when something's correcting. So this is irrelevant. Has to be this way in order for you to catch the Fibonacci. But the next one would be down here, and I'm really thinking about, if it gets down here, how I might play this. So maybe I'll make a video about that today and see what happens.